Meanwhile, China says that it will create a blacklist of unreliable foreign firms and individuals in what looks to be a new escalation of its trade spat with the US. Companies or individuals who don't comply with the market rules and/or stop supplies to Chinese enterprises for non-commercial purposes will be included. Washington added Huawei, one of China's largest companies, to a similar trade blacklist earlier this month, restricting the telecom's access to hardware and software supplies. The May data on the Chinese economy shows that the manufacturing sector again slowing down, with the PMI, or Purchasing Managers Index, for May at 49.4, falling below estimates. At a figure below 50, well, this indicates, of course, that China's manufacturing sector has contracted. Our Hong Kong correspondent Roland Lim takes a closer look at the figures.
There's been a softening in factory output. 51.7 was the reading in May as compared to 52.1 in April. Domestic orders too softened to 49.8 as compared to 51.4, indicating that Beijing's recent growth boosting measures have yet to take any effect on the overall economic activity. Chinese exports also unexpectedly fell in the month of May, 46.5 as opposed to 49.2. That's a sharp drop in shipments to the US, while industrial output as well as retail sales also showing weakness. On top of that, fixed asset investments unexpectedly stumbled in the first 4 months of this year, as well as the weak data showing that profits for industrial firms contracted. Regulators have fast-tracked billions of dollars in infrastructure investments, but the underlying economic picture remains relatively soft, apart from that brief period of stabilization back in March. What's China doing about the current slowdown? Well, Beijing has ramped up fiscal stimulus this year, unveiling tax and fee cuts amounting to some 2 trillion renminbi. That's about $300 billion to ease burdens on companies. Restrictions on local governments have also been relaxed. They can now issue some $310 billion worth of special local currency bonds to fund infrastructure projects.